back after the initial large discount, but we're still in the red quite convincingly. The mid cap and the small cap indices too are trading in the red. Remember when we started off, about 1.5% for the mid caps, it's still that way. Small caps are down close to 2%, and we are 1.38%, so a bit of a mild recovery at the small cap end of the market. So the sluggishness stays. Really interested in seeing what the FI figure is like today after that large number in sale in Friday's trade. Bring up the heat map for the Nifty and show you what's moving and what's not. 6% up for ONGC. The Jeffries upgrade has had a meaningful impact on this stock, up about 6%, and that's the stock of the day. We'll be getting in Mihika to talk about that a bit later on. Hindalco is up about 2.5% because of the metals rally. Some bit of an uptick on Bharti, Reliance, so telecom as a bucket has not done too badly. Vodafone Idea too is in the green. What's not done well? Financials are down. IT is down. Almost everything else is correcting in trade today. So that's the key point that you have to keep in mind. Adani Enterprises, Adani Port, I think this is because of the Israel Haifa port connection as well. But that too is down. ICICI Bank is down. TCS is down. So no respite really, but for very specific stocks. Just one list of the BSE 500 that we should try and pull up, and the stocks which have moved the most, both on the gaining and the losing side. And you're seeing on the losing side, not too many deep cuts, but everything that is down between 4 and 5%. Spark down 5% for the fourth day in a trot. Sapphire Foods is down. KEC is down. Metropolis, one of the best performers in Friday's trade, is down about 5.5% as well. So it's not look very great. On the broader end of on the gaining side, some gains for HEG, second day in a trot again. This one is doing well. Eureka Forbes is up 5%. CSB Bank, I reckon, by virtue of the gold loan optimism as well, is up about 5%. Capri Global 13%, Aster DM 7%. Large dividend, and Aster DM is up about 7% as well. Just last two stocks that I want to mark. One of them is Fortis Malar. Alongside Aster DM, there's another stock, Fortis Malar, which has given a large dividend. The price is 67, the dividend given is 40 rupees, no surprise. The stock is up 20%. And Exide has had a good run today on a virtue of the Morgan Stanley note. And that stock is up about 2.5%, off from the highs of the day, mind you, but still in the green. Let's get in our guests on the show. Hemen Kapadia, firstly, to talk about technicals, and Siddhartha Khemka on the fundamentals. Hemen, good having you. Thanks for joining in. And Siddhartha, great to have you on the show as well. It's the first time that I believe we're interacting on the closing show. So good having you. Hemen, can I start off with how the charts are looking today? Are they very wobbly, or are we near some supports?
Very good afternoon to Niraj. Thank you for having me on the show. It's always a pleasure. I don't think it's as wobbly as it could have been, because frankly speaking, before all this started, Niraj, Dow Jones has peaked 4 weeks ago. The VIX over there went to 21 on Friday. Okay, different economy, different setup, not fair to compare. But I mean, it's sort of given early warning that markets equity markets are going to be under pressure. Gold on a tear, and dollar index is going strong after giving a breakout. So frankly speaking, it was just a matter of time. So having said that, over here, the gap today on the Nifty, Bank Nifty, is not a good sign. That's going to be a bugbear. It's going to harass till it gets covered up. It's going to provide resistance. And if it doesn't get covered up, we're going to see further downside. In terms of levels, 22,300, 22,125 supports coming in. What is surprising is the Bank Nifty. It was a late bloomer. One would have thought that it would outperform, but it's not even tried to cover up the gap like the Nifty has. So I'd say wait for a bit. It's not the end of the world scenario, but yeah, for the time being, I think we are in for a shakeout, which probably is not in a mood to go away. Looking at the bright side, the VIX hasn't gone up at 12.5 meters, frankly speaking. I don't think it's much. And if you look at week on week, we'd already seen significant increase on Friday to Friday as far as the Nifty is concerned, which I believe on the hindsight obviously got short positions. And the Bank Nifty has seen major open interest.
Hemen, just allow me to come in. The IMD is speaking about the monsoon. We just need to go across there for a moment.
The conditions are present over the Indian Ocean, and the latest climate model forecast indicates that positive IOD conditions are likely to develop during the later part of the southwest monsoon season. And the other signal which is important is the northern hemisphere snow cover extend during the last 3 months, January to March, below normal. It was below normal, hence it is inversely proportional, so it is likely to be a better monsoon rainfall. So most of the conditions, statistically, it is a favorable condition. And also you know that this year, maybe the last few years, we are able to provide this forecast not only from statistical but also dynamical forecast, so that we are able to give the spatial distribution of the rainfall also the over season. So this is in general, and maybe if you want to any specific, we can have a question answer later. Before that, I want to have a little more detailed presentation from Dr. Mohapatra, Director General IMD. So you can present, and then later on we can take up some of the questions from you. Thank you very much.
थैंक यू सर। आज की प्रेस कॉन्फ्रेंस में सभी प्रेस एंड इलेक्ट्रॉनिक मीडिया के आप फ्रेंड्स को हार्दिक स्वागत है, जो यहाँ उपस्थित है और जो ऑनलाइन में हमारे साथ जुड़े हुए हैं। जैसे सेक्रेटरी साहब ने बताया, आज की प्रेस कॉन्फ्रेंस में
All right, of course, we will keep on getting you the key updates from the IMD on the flashes on the screen, so keep that in eye. Above normal southwest monsoon, we still don't have the period for the overall country monsoon, so we'll get to that in moments from now. But Hemen, sorry, you were making this point. Now, can we round that up with the stocks, and then we'll get to Siddhartha on the fundamentals? What are the stock recommendations for the day?
Yeah, Niraj, I would go a bit contra. I would like to buy something in a wobbly market. Okay, you have UPL. One can buy UPL at 490, stop loss 470, target 530. Logic is it formed a weekly base. Mechanical indicators are given a buy. I wouldn't say a double bottom, but I believe it's on the verge of forming a double bottom. So stock looks good. The other stock is already in an uptrend, Niraj, AB Capital. The stock has done well. It has outperformed. And we are clearly in a uptrend on all time frames, short, medium, long term. So one can buy AB Capital at 205, stop loss 195, target of 225. Niraj.
Okay, specific ideas from Hemen as well. Siddhartha Khemka, great talking to you. What is it that the dealing room is currently thinking like? I mean, is it a bit of a risk off currently, or are you guys going out and conducting business as usual?
Yeah, hi Niraj. So definitely my first interaction with you on the closing show. So great to be here with you. So dealing room, what we are seeing is that there is definitely a lot of queries with regards to the outlook from here, and clients are definitely asking that if the situation is looking worse, they would want to shift a little bit of their portfolios to cash. What we are seeing is definitely that there is some risk of sentiment that is increasing, and that is only accentuated by what has happened over the weekend in terms of the geopolitical issues. What also happened over the weekend was the manifesto for BJP came out, and my personal belief is that if had this geopolitical tension not been there, a lot of these domestic focused stocks and sectors would have seen a huge run up in today's market. So there is definitely a lot of interest, queries from the clients with respect to stocks, sectors that could benefit from the upcoming election and the new government being formed at the center. So domestic themes are something that are being looked at or being tracked in this current geopolitical environment.
Okay, that's a point well taken. Today, of course, a lot of stocks are flying around, and that is something that we should try and focus on. Let's start off with the stock of the day, and to our mind, it has to be ONGC. Jefferies initiated coverage on ONGC with a buy rating, target at 390. That likely is probably one key reason why the stock is doing what it is doing. Mihika tells us why Jefferies believes the stock will gain going ahead. Mihika.
Yes, it's initiated a coverage at a buy rating at a target price of 390 rupees, which implies a 47% upside to the previous close. Now, one is the prospective pricing for crude, a tight crude oil market, with the IEA also increasing its oil demand growth estimate for 2024 while reducing its supply estimate. Furthermore, the KG basin production of ONGC is not subject to the special additional excise duty, which helps in terms of pricing. Other gas reforms in the gas sector in terms of annual hikes of the ceiling price, the floor prices, and the new wells from the nomination fields being applicable to premium pricing will help the company. They've also estimated ONGC's domestic production to return to growth over FY 24-26, and they've estimated a 3 and 6% production CAGR for crude and gas over FY 24 and 26. They've also built in a 1% production hike for OVL, and this is assuming no resolution is met in terms of the Russian assets, which the company does plan to do in FY 25. And lastly, they expect the net cash position of the balance sheet to improve with free cash flow around 71,000 crores in FY 24-26, and they also expect the net debt to equity ratio to fall from 0.32x to 0.16x over the same period.
Strong move there. Thanks, Mihika, for that. And I believe Motilal also has been bullish on ONGC. Siddharth, correct me if I'm wrong. You guys were bullish. I don't know what's the current stance. Can you tell us whether you're constructive here or not?
Yeah, definitely. See, Niraj, we see that the upstream oil companies are getting into a structurally up cycle. And that is where we believe that the increasing production, which Mika also talked about for both ONGC, Oil India, we see that as a structural change from here on, which will provide the growth. And we are seeing a stability in the oil prices, what we have seen last entire year, despite several global issues, geopolitical tensions, the production changes at OPEC. Still, we are seeing that crude has kind of consolidated in that range of $75-80 kind of a mark. Currently, yes, it has gone up, which is also supportive to the upstream oil companies. And between both of them, we see that while we like both ONGC, Oil India, we see Oil India also doing well with the Numaligarh refinery new capacity being added, and also the company adding 3 new wells in the Andaman Nicobar, which will start production from the mid of FY 25. So all these things would lead to a huge ramp up in the profitability for Oil India. And hence we see a good upside from current levels in both ONGC and Oil India.
Hemen, what about the charts here? I mean, the stock has done really well. Can it do more?
Yes, Niraj, I think so. Because we spent 10 weeks over here between 250 and 285. And frankly speaking, there has been resilience. The undercurrent has been solid. It hasn't dipped. We've seen a couple of checkouts in the market. It's not gone down that much as it should have. I'm saying should have. We moved from 120, slow moving, government stock, 285. So I believe that if a correction comes in, it would be deep, but it's not. We take out 285. I believe we are working towards that, Niraj. After 10 weeks, I would say we are. We take out 285, which I believe is on the anvil. The all-time high of 314.57 posted in June 2014 is going to be tested. Yeah.
Okay, stay on, gentlemen. So much more to talk about. Some flashes on your screen. The India-UK FTA. That is still in the works. The negotiations still on. Next round it will be held in May and June. Remember, a lot of individual businesses as well are in focus because of this. We'll talk about this with Siddhartha Khemka on the other side of the break. Remember, they're saying that a couple of key priority issues yet to be sorted out. So, interesting. United Spirits, there are a clutch of others actually, by the way, stocks which will get impacted with this FTA, if you will. We'll talk about that on the other side, as I said. Stay tuned to NDTV Profit. Back with India Market Close right here on NDTV Profit. And lots of news flow out there. Amongst others, arguably the most important moment for last week was NDTV Profit's news break turning out to be true that Vodafone Idea is coming with an FPO and the quantum. Now, the management today has said that the company is seeing high investor interest in the FPO and said the proceeds are going to be used for 4G and 5G capex. Smriti, who broke that story last week, joins in with the key takeaways from the management commentary. Smriti, you were at the venue. What is it that you've picked up? Oh, I think we'll just get that going in moments from now. But while we just wait for Smriti to come in, Siddhartha, a quick word on what do you make of this Vodafone's resurgence or revival, if you will, and what could that mean for Vodafone, for Indus, and for the other telcos?
Yeah, Niraj. So I think one of the biggest overhang on specifically Vodafone has been the balance sheet and the recent fundraising activities that the management has been having. Definitely helps improve the balance sheet and give a lifeline to the company to be able to survive in this environment. They have been losing market share consistently, but if you look at the overall environment for telecom companies, that has improved a lot. Companies like Bharti, as well as Jio, the average realizations have only inched up. ARPUs have gone up, and gradual penetration of smartphones has only leading to uptrending of the consumer behavior. So I think overall environment for telecom companies remains very positive, and in that, if Vodafone is able to revive itself, that is a big positive that I think the market will take on from here.
Are you guys buying? Are you a buyer in Vodafone, or would you rather look at Bharti Airtel or maybe Indus Tower, Siddhartha?
Yeah. So, Niraj, we currently have a neutral rating on Vodafone, and as I said, there is a huge and the debt obligation plus the annual outflow about 430 billion rupees, which continues to kind of drain the balance sheet. And once this fundraise happens, and I definitely there is a lot of excitement in the market, given that the fundraise is at a discount to current valuations. But net, we are still A positive on Bharti Airtel, followed by a Jio. We are neutral on Vodafone as of now.
Okay, Smriti joins us now with the key takeaways from the management commentary from the venue. Smriti, hi, can you hear me?
Hi, yes.
Okay, great. So Smriti, we're just talking about
a couple of
this
things
thing
that the management spoke about today.
Please take it away.
Right. So a couple of things that the management pointed out today, that they're seeing very high investor interest into this 18,000 crore FPO that's going to be launched this week itself. Now, they reiterated that the FPO proceeds will be used for expansion of 4G and for setting up of 5G services. Now, they say they're already engaged with the vendors of for 5G, for setting up of 5G, and it plans to roll out 5G for 40% of revenue coverage in the next 2 to 2.5 years. So that's the goal that the management has kept for itself. Now, the company said that they cannot use these proceeds to repay the debt, any kind of debt. Now, this may be a promoter holding debt as well, or the government debt. So that these proceeds will not be used for that. They plan to pay the government dues. Now, just to remind you, they have a gross debt of 2 lakh crore rupees, and out of 90% of that is owed to the government. From FY26, about 30,000 crores of debt will be payable each year, annually. So these funds cannot be used for that. However, an interesting point that came out was that they still have an option of converting these dues into equity. So that means a higher dilution again. Post this FPO, the government shares going to anyway dilute from 33% currently to 24%. However, Akshay Mundra, the CEO of the company, said that even if the government converts their debt later on, the stake will not change as much. Now, on the tariff front, they did not give any quantum of tariff hike that they're seeing the next year or so, but they do say that this is the need for the industry for it to sustain at this juncture. Now, they also clarified that there's no ongoing conversation with the government for deferment of dues that will be repayable from FY26. And on the pricing front of the FPO, they did also clarify clarified that there is no role that the government has played in the pricing of this FPO. Now, to remind you, the stake post FPO is going to come down below 25%. So that's pretty much the picture here for Vodafone Idea. They do not have so much of focus on the net worth, which is negative at this juncture, but they do focus, their focus lies towards generation of cash flows and management of investments at this point.
All right, Smithy, thanks for that. And that's the word on Vodafone. The fundraising exercise on this week, the FPO, seeing some marquee investors, as the NDTV Profit story last week broken by Smriti and Vishy spoke about as well. Hemen, what about the charts for Vodafone, Indus Tower, even Bharti Airtel for that matter?
Indus Tower is a different kettle of fish, Niraj. I think with correction, the stock is going to gravitate towards 500. Technical parameters all sound all time frames. Vodafone has, the track record has been abysmal. Multiple times there have been sparks of light which haven't gone ahead and it failed to deliver. Currently, not much to lose on the short-term charts, but I'm not sure if things are looking very hunky-dory on the medium-term charts. But like I said, not much to lose. So a bounce is around the corner. If this converts into something significant, it's too early to take a call on that. And coming back to Bharti Airtel, Niraj, I think extreme near term, we've gone into a sideways consolidation phase, and this is the 5th week. Okay, we've just begun the week. So let's say 4 weeks. 4 weeks in a row, 1180, 1240. But the undercurrent, one is solid. We are almost at its all-time high. We have been in an uptrend for the last 6 years and counting. So further upside seems very like a distinct possibility.
Okay. Distinct possibility is what Hemen is saying. Further upsides for Airtel, and Indus Tower clearly likely the one which really stands out. Okay, let's move tracks. Aside of Vodafone and Telecom and ONGC, the other big one that stood out for me today was the Morgan Stanley reiterating its overweight on Exide. Remember, it's a story that is starting to seem to be unfolding by virtue of the fact that they're setting up what will arguably be amongst the largest EV plants, and the tie-up or the contract with Kia Hyundai could be interesting too. Morgan Stanley cites all of this as they reiterate their overweight rating on Exide and believe the share prices could rise significantly over the next 10 years. Puneet has more details. Puneet.
So the stock also hit an intraday high of roughly 6% today, and this is on back of a Morgan Stanley note which has reiterated their view of overweight on the stock with a target price of roughly 485 rupees per share, which is roughly a 22% upside from the start of trade today. Now they say that the company has an early mover advantage in the EV battery space, and they say that the share price could rise significantly over the next 10 years for the stock. They see that the addressable market to increase to roughly $13 billion for the industry, while they see that the partnership with Hyundai signifies and validates the technology and the investments of over 2,000 crores that the company has done over the past 2 years. Finally, on valuation, they have said that the current target price for roughly 485 is at 1.4 times price to book versus roughly 3 times, which is given to global peers. While during the scale-up phases, then generally a higher valuation is given to these battery stocks of roughly 4 to 6 times. They see that could roughly imply the stock could double from these current levels, and they also see that on a bull case they see an 88% upside for the stock at roughly 6 times price to book. So this brokerage has really reaffirmed Exide's investments and is very, very positive view on the stock, and as you rightly said, the top gainer today in the auto space. Back to you.
Point well taken, Puneet. Siddhartha Khemka, battery companies, two of them, one of them has outlined its plans, got a contract, the other one maybe not so. Are you constructive on this space and Exide in particular?
Yeah, Niraj. So I think what has happened in the last few days have definitely given a big leg up to their lithium-ion battery plans. If you see the core business, what we are seeing in the automotive business, past few months have seen an uptrend in demand, both in the OEM as well as in the replacement. Also, if you look at some of the most of the end user markets are showing sign of recovery with the monsoon being forecast being normal. auto sector is also seeing a significant leg up, which helps the core business of Exide. Having said that, they are definitely putting up a lot of capacity. So Exide has already invested 7.3 billion in its wholly owned subsidiary, which is the Exide Energy Solutions, through which they were looking into the lithium iron space. And that is something which is a longer duration, you can say, a growth kicker to the company. So yes, definitely positive, but one needs to be cognizant that at current valuations, a lot of the growth would be back-ended, and the current valuations, there could be some time correction in the near term. We definitely need to see the Q4 results and the proper commentary post the results that would give her further room for upside. Otherwise, at current levels, I feel one needs to definitely wait and watch.
Okay, so that's the fundamental view from Siddharth. In some sense, slightly different than what Morgan Stanley is saying, but which is fine. The question, therefore, Hemen, comes to you before we take that break. A bit of a leg up today over the last few days as well as gained. Still, it's the last one quarter. Can it do more, or do you believe it's hitting some resistances?
I mean, it's at all-time highs. So not many, in the sense that nothing left in terms of resistances. But 130 to 420 in 2 years, 290 to 420 in 5 weeks. I'd say it's overdone somewhat. Once again, no reversal yet. Mild overbought situation. It seems up and up on all time frames. But if I were to recommend, that's not what you asked me, but if I were to recommend a buy, the risk-reward ratio would not be in the favor because the stop loss would be too deep. Everything is hunky-dory, but like I said, the run-up, quantum and the speed needs sanity. We need some sort of a reality check. It's not yet visible, but I believe it could be around the corner.
Okay, in some sense, some bit of caution from both our experts. Take a moment, Siddharth, to thank you for joining in today and giving us your thoughts. Really appreciate your time and look forward to speaking to you more often.
Thank you.
All right, Hemen, stay on. So much more to talk about. We'll take a break and come back in moments from now. Well, back with India market close right here on NDTV Profit. The market's still sulking. In fact, 1.1% means that they are very close to the low point of the day, if not at the lowest point of the day. What is the derivative picture looking like? Agam Johnson to talk about that. Agam, how do you dissect what's happened in trade today?
Well, this certainly seems to have a little bit more of a selling pressure coming through based on the cues that we got last Friday. And at the moment, considering the first day of the trading week has also been on a weaker note, well, at the moment, what we are seeing is a little bit more selling pressure coming through. Once again, when the Nifty futures now at around 22,350 at the lowest point of the day, and we are now looking at, well, an increase in open interest towards what looks like fresh shorts into the system. And as far as the Bank Nifty goes, again, this is where we are looking at shorts. The Bank Nifty is taking a cut of 1.7%. We're looking at a sharp decline of as much as well over about 800 odd points. And that is, of course, a concern out here. In terms of your options market too, well, on expected lines, we're seeing a lot more writing now shifting well lower as far as the call writing is concerned. 20-400, 20-500 calls now written in today's day of trade. And, in terms of your overall open interest distribution picture, once again, the mark of 20-700 moves slightly out of the picture and 20-500 comes back into focus as we start seeing a little bit more writing there, even as the index moves lower. And of course, in terms of stocks, we'll have more shorts at the moment in terms of Coromandel and Bata. Exide is the other one which stands out, but towards the positive in terms of stocks which is seeing unwinding. Let's pull that list up as well, where we do have a lot of long unwinding in Metropolis, ABB, Balrampur Chini, GNFC and Vodafone Idea. All in all, the kind of longs unwinding that we saw on Friday has now turned into fresh shorts this Monday afternoon, and it's going to be a wait and watch whether or not there is going to be some amount of recovery or no. But at the moment, it certainly looks like the bears are back in action, and the rest of the week will likely see a little bit more volatility based on the kind of price action that we've seen in the previous two sessions.
Okay, well, that's putting into perspective a lot more shorts than otherwise, so that's to be kept in mind as well. I was trying to look at what's happened to the world markets by and large. I must say the Dow and the S&P are not in the red. They are trading in the green as we speak, marginally at that, but in the green. So it's not that the global markets are, this is of course what they did on Friday's session. The futures 0.21%, right there on your screen, are, the world markets are okay. It's not really all that mayhem out there. Jigar Mistry, co-founder of Buoyant Capital, joins us right now on the show. Jigar, it's been a while. Thanks so much for taking the time out and speaking to us. Good afternoon, Niraj here. Lovely to have you on the show.
Hi, Niraj. Thanks as always for inviting me again.
No, pleasure is ours. So, Jigar, what's the sense? Are you guys sitting on the sidelines, or are you putting in money to work in the current volatility?
Some money always is there, Niraj, to be put to work. But see, take a step back and look what's happening since sort of November, right? Now, November, December, you saw two events that completely re-rated the Indian market. One, in November, the Fed appeared like it's pivoting much sooner than expected. And secondly, BJP won those 3 state elections. And in public opinion, I think the probability of a continued policy action for the third term went up from 0 to like 100%. Now, you sort of dissect both those events across durations. The rate expectations today are higher than what they were in November, right? It fell in between in December and Jan, but those sort of cuts have already been reversed. And BJP, sort of, if you had a probability, I would say at least 70 to 75% probability, even before the state elections came through. So I think both those events, we are in that backdrop when we are now looking at the BSE small cap index in the 90 percentile of sort of 5-year returns since their inception. So only on 10% of the occasions ever have you traded at a higher return than what you are today. And the same number for BSE 500 is 3 in 10. So in the top 70 percentile. With that in the backdrop, I think Indian markets are finding an excuse to settle this whole rally that has happened. Much of the rally, especially in the small and mid cap, is driven by valuation re-rating. and not so much as the earnings expansion, which has been the case with large caps. So I think they're finding this whole alignment where the small cap needs to sort of recede a lot more. And obviously, sort of crude becomes a reasonably good example for settling that debate, Niraj.
Okay. Just trying to wonder, Jigar, where is it that you would be most constructive on in the current context, considering that global PMIs are starting to show upticks that usually leads to some bit of buying, let's say, in some of the input-related names. Maybe some of the capital good companies could come into focus as well, especially those that are focused not just India, but globally, because we're seeing these green shoots in Europe and US too, and the Middle East, of course, in addition to India. So where is it that the scene may not have been positive, but because of there being a slight surprise on global growth, things could be better?
Absolutely. So see, one very big sort of change in, for the lack of a better word, trend that we are noticing is that since 2012 to 2021, Niraj, the gross fixed capital formation, and that in India happens across 4 large events: the central government capital spending, state government capital spending, real estate and housing, and the private corporation spending. So when you measure GFCF as a percentage to GDP, you had entered into a declining trajectory starting 2012. The last government was not too keen. The first Modi government took time to understand. Then came the asset quality review. So private corporate borrowing went down completely. So that number fell quite dramatically. And 80% of the incremental lending was happening in the PL space. So can be housing, personal loans, and the likes. And therefore, you saw a huge re-rating with a lot of these names. Starting 2021, we are seeing a complete change in all the 4 parameters. Central government spending has gone up. State government after COVID are now recovering. They are typically 1.2 times the spending of the the center. The real estate housing is doing well, and private corporation capex spending is now at its all-time high. So that's typically 7 odd lakh crore. I'm talking only of the listed space. The winners that it will throw up will, point to some of the names that you said. It could be in the capital goods space. They already trade at a reasonably large valuation. And some of us are still scarred from the 2008 to 2021 zero return in the whole sector. There could also be EPC plays. There could also be corporate banks play in sort of against the whole consumption lending space. So if we sort of juxtapose all of this, and add to the fact that, globally things may be turning around in this fashion, then this becomes a very obvious bet. The only sort of play here would then be the whole FPI sort of short-term exit that would manifest if the sort of Israel-Iran situation keeps escalating. They can only sell what they own, and which is largely banking sector, which you probably the reason why you are seeing a large cut there, despite no apparent impact in the shorter term for these banks. But sort of those becomes an easier direct play to play with. And then obviously cement, capital goods, and all those still remain a reasonably decent sort of exposure.
Okay, we'll talk about some specifics with Jigar as well. And of course, Hemen stays on. But I want to get in my colleague Varsha because she tracks healthcare and chemicals very closely. Now, the chemicals space has started to buzz, right? With global players being optimistic about recovery in FY24. How have the specialty chemical companies, one, done in the last few months? And the reasons about potential upsides or downsides in that space. So, Varsha, good having you. Let's start off by talking about what's happened in the space, recent developments, so on and so forth.
Well, thanks Niraj for that. So yes, we all know that chemical sector has been under pressure since last one and a half, 2 years. Now everybody was of the view that things will be back sooner. Now analysts, global companies and Indian companies are expecting the next 1 to 2 quarters to be good for chemical sector. Now let's see if there is any signs of any. So global specialty chemical companies, if you see, have reported mixed bag of performance in fourth quarter and calendar year 2023, with some companies reporting sequential rise in volumes while other reporting sequential decline. Now, according to the Centrum report, global companies kept lower inventories in the end of the financial year, which actually impacted the exports of Indian chemical exports basically in Q3 FY24. But now exports since last 2 months, if you see, have been good. So starting with the export data which came out on 10th April for March 2024, few companies did see uptick in their stock prices backed by healthy export data. So we have Aarti Industries, Vinthi Organics and SRF, which gave healthy export data for March 2024. Also, if you see in last 1 or 2 months, that is starting from December and January, as presented by Spark Capital, there was some growth in export data. For example, Jan exports grew 3% year on year, while December exports grew 2% year on year. So from the export point of view, yes, we are seeing some kind of recovery, but let's see if this has been converted into stock price performance. So if you see, AMI gave 17% return in last 1 month, while Jubilant gave almost 26%. Aarti saw an uptick of 16% in last 1 month. So yes, some credit to the uptick in stock performance can be given to export, healthy export. Now, if you see, let us just look at the chemical pricing trends, whether that is giving some hint for the recovery. So prices of BOPP film, which is the finished goods for SRF, has almost risen in last 1 month, and sodium nitrite, which is again a finished goods for Deepak Nitrite, has also seen uptick. So this is on the basis of pricing trends and exports that we have seen.
Varsha, just very quickly, let's round this off. What is the commentary that is coming from global chemical companies?
So, Niraj, we do have commentary from global chemical companies and Indian chemical companies as well. So, for example, AGC Japan is expecting business environment to recover, but the recovery is expected to be full in 2025 and moderate in 2024. Then again, if you see FMC's commentary, they are viewing 2024 as a transition year with momentum expected to build as the year progresses. Also, if you see the Indian companies, we did speak to Yasho Industries recently, so they are expecting. They're actually not expecting any downward further, and even Vinthi Organics is expecting good demand in their ATBS, which is again a chemical used in oil and natural gas. So Aarti Industries is also observing a rebound in demand of tech. So from global commentary point of view, and Indian companies, they are expecting good uptick in next 1 to 2 quarters.
Okay, thanks a lot for that, Varsha. So that's great analysis. Can I first get Hemen in, and then we'll get in Jigar on some specifics as well. But Hemen, you've spoken about this a couple of times in the recent past about some stocks standing out on the charts after a really long time. Chemicals, specialty chemicals, anything that stands out for you, Hemen?
Yes, actually, frankly speaking, Niraj, there has been distance between the cup and the lip. But this time around, I believe the cry wolf is gone. It's sincere. There's a clear, absolute, sincere turnaround happening. Well, if you look at stocks like MOFSL, you look at Thirumalai Chemicals, maybe even a GNFC, a GSFC, and the big daddy of them all, Deepak Nitrite. Frankly speaking, Deepak Nitrite has gone nowhere. Nowhere in the sense it peaked at a high of some 3020 in October 21. And we are in April 24. It's been like, what, 2.5, almost quarter to 3 years. And now things are beginning to look up. The oscillators on the monthly charts are just about turning positive. I believe this could, when you have Jubilant Ingravia, you have Lakshmi Organic, many of the stocks, Epigril, many of these stocks are looking promising in different time frames and different time cycles. But normally I've seen if Deepak Nitrite wakes up, everybody else follows suit, and 2400 is a level to watch out for. We're at 2300. I believe that the period of somnolence has passed, and now virtually all of these stocks are getting active. Maybe there could be a little bit of time gap between all of them participating in unison, but I think Deepak Nitrite is going to lead the sector up. So I'd say this looks very promising, Niraj.
Jigar, before we thank you, I know we are slightly over, but just wondering, have chemical stocks hit your screens as well Fundamentally, what is it? Because it's a very bottom-up thing. You can't paint the whole sector with one brush. So anything that stands out for you within this space?
So, on a lighter note, Niraj, one of the investors with us says that, and they run a large chemical play in India, and they say that a lot of you investors think it's China plus one. We running the business think it's China only, there is no one. Right? So things essentially are not as hunky-dory as it appears. We in the markets think that everything is specialty chemicals. He told me essentially that what sells by the kilo is specialty, everything else is commodity. Having said that, there are a few plays that we have traditionally held in the pigment space is one of them, in the bromine space is another that we own and continue to like, but they are again minuscule quantities, less than 3% odd exposure that we have there.
Okay, well, maybe a couple of players like Neogen and bromine, but interesting that Jigar Mistry is not quite gung-ho out there, even if some of the other investors are, but his clients who run chemical companies are saying this. So, well, stand up and take notice. Jigar, great having you. It's been a while, but good talking to you today. Thanks for taking the time out and being with us.
Likewise, Niraj. Thanks as always for inviting me. See you soon again.
Most certainly. Yeah. Well, that's Buoyant Capital with their thoughts. But chemical companies, Hemen believes that Deepak Nitrite will probably be the one that could move the needle. Let's wait and watch. Okay, we've done a lot of deep dives into stocks. Now let's try and talk about some of the specific stocks and then also hear some other guests that they spoke to us during the course of the day. Hemen, some very strong moves in CSB Bank. Now, everything related to gold seems to be doing well, right? CSB Bank has a gold loan portfolio, Manappuram Muthoot, etc. doing that, Senco Gold doing that. Some of these players, whether lenders or actual players, how do they look on the charts?
Specifically, Niraj, CSB Bank looks quite promising. One, it's in an established uptrend, and within the uptrend, it's given a 4-month correction. So that is gratifying. If a stock gives you a time and a price retracement, I think it augurs well. So it's poised nice after a 4-month correction. 420 historically is something which it has never sustained above. Okay, we don't have that much of a listed history, but whatever we have. And I think we are on the verge of taking them out. 500 is on the horizon in the next 8 to 10 weeks, I believe. Looks quite good. In terms of Senco Gold, Niraj, that you mentioned, I don't have that much of data to go on for, but whatever limited data that I have, it's clearly in an uptrend on all time frames. But if it moves 19-20% today with no known resistance levels, I'm not sure if it quantifies as a fresh buy. If I were to pick and choose, CSB looks better. Senco, Senco, just because it's breaking out. Senco has no levels and it's moved quite a bit.
Speaking of Senco Gold, with this gold and silver prices being where they are, we spoke to Mr. Suvankar Sen, who's the MD and CEO of Senco, on the recent price trajectory as well. Listen into a slice of that conversation.
Movement of gold price that we are seeing over the last 1 month, it's almost gone up by 20%. So we all know what the reasons were. Initially, people were thinking that the Fed will cut the interest rates, which is not looking like it's going to happen. But the geopolitical tension, the escalation of the Israel and the Hamas war with Iran getting involved, I think that's the uncertainty which is driving the gold prices really, really up. And geopolitically, we can clearly see that at one end we have Russia, China, Iran, and at the other hand we have US and the other Western countries. So I guess that the investors are looking for a safe haven, and it's the national sovereign funds or investors that are buying into gold and driving the prices. The same thing is happening with silver as well.
Okay, a closing strategy and then a question on HUL today from Hemen. Hemen, firstly, a closing strategy. What is your top closing strategy?
Well, top closing strategy is slightly confusing. I think we are oversold. A small bounce, a small bottom and a recovery comes in tomorrow towards the end. But there could be some pain in the morning. But I'll go in for BTST on AU Small Finance Bank. Be at 634. So one can buy at 634. Stop loss of 628, target of 646. Risk reward ratio 1:2, a BTST on AU Small Finance Bank. Niraj, I think if we are weak tomorrow or we go lower, chances are that we'll end on a positive note as far as tomorrow's closing is concerned.
Interesting. Hemen, just one quick further chart check, follow-up chart check on HUL. Today the volumes seem to be high on that one relative to what averages are. The stock is also down. Does it show any breakdowns or weak trends?
Well, frankly speaking, 2308 was important. Now we are on a very important support level, Niraj, 2187, and we posted an intraday low of 2190. We not closed below this 2187, Niraj, on the weekly chart since the week ended 17th June 22, so almost 2 years there. So basically, it's lower tops, lower bottoms. This drooping shoulder scenario continues with no respite. If there is a bounce, if any, the monthly picture doesn't inspire too much of confidence. If it doesn't stop here, further pain. So no, the volume could be incidentally, yes, and it's fallen off a cliff. So it's been down Niraj for 1, 2, 3, almost 5 months from 2670. So if it bounces a bit, maybe, but the setup doesn't look good.
Okay. Setup doesn't look good for HUL. Mind you, watch out for this one. I wonder what Zomato is doing in the session today. And then we'll talk about Prateek Agrawal's view on futuristic themes. Zomato probably as futuristic as it can get. The volumes and the stock quantum of stock marked for delivery is very, very high in Zomato. And that's to be kept in mind as well. Bharti Hexagon, the listing for the last week, and which had a successful listing. I wonder how is that one doing, because on the day of the listing, Bharti Hexagon had a really good move. Let's see if that is lasting. Just kind of steady. Lastly, the metal stocks, aluminum stocks. Aluminum ran up. Can it really last? Remains to be seen. But what are Hindalco and Nalco doing? Hindalco, we know we did okay, about 2.5%. What is Nalco's stand currently? About a couple of percentage points. Hemen, before we thank you, a word on maybe Hindalco or Nalco?
Hindalco, all-time high, Niraj. So not much. No, sorry, not all-time high.
Not all-time high, yeah.
Sorry, all-time high. My bad is 636 in March 22. So setup is positive. Internationally, copper has given a breakout, Niraj, very strong breakout. Normally, I've seen whenever international copper breaks out with some hits and misses, our entire metals space, ferrous, non-ferrous, all move. Hindalco gave a 2-month correction, looks good. Rock solid support at 504, took support, bounce back. I believe we are heading towards 640 and 680 Niraj. So Hindalco looking good, but it's not a very short-term sort of a call, more of a positional view. And if you're talking about Nalco, it's even better. So both looking good, but I think Hindalco has underperformed technically a wee bit, so that looks better. The risk-reward ratio and the stop loss could be more understanding in terms of our position.
And Hemen, just one very quick question before I thank you finally. That is, if you were long ONGC in the morning, when it opened flattish, you're getting 5.5. Would you collect your gains, or would you wait for a day or more?
If it's intraday, I'm out.
Position of course. Yeah, but if you have a choice between being positional or intraday, would you continue with your longs?
Intraday I'd book.
Okay, but if you're a positional trader, you'd stay on. It doesn't show any nervousness.
I'd stay on, stop loss 265, target for 320.
Okay, point well taken. Hemen, take a moment to thank you for joining today. Really appreciate your time. That's the view from Hemen Kapadia on some specific stocks. By the way, speaking of futuristic themes, which one of the futuristic themes would invest, like green energy or whatever, which is Prateek Agrawal of Motilal Oswal is constructive on while building out a portfolio? Listen in to him as he speaks about it.
Our thought is there was a time when India used to be follower of technology trends. People made a virtue out of it. That if you adopt a technology trend 2-3 years, into it. Look at telecom when 2G, 3G, 4G happened in the country. It would lag the West, but now increasingly we are with the world. In some spaces we are ahead of the world. So very different kind of moves we see. And there are thoughts which are global. For example, there is pollution that happens. There is security angle as well. So EVs will succeed. Maybe EVs stroke hybrids. Similarly, renewable power will succeed. I mean, there are no choices here. It has to. And the way to then go about doing things, when the market is just opening up, for example, in EMS, is to probably back guys, who have fire in the belly and would run and grab those opportunities. It does not happen too often that, there are opportunities and the government comes and says, you run, you do it, we will fund 50% of it, as is happening in some spaces, and the state government comes and says we'll fund another 25% of it. So this is when, this is built for entrepreneurs kind of a situation. And the whole idea is to find the best of them and build portfolios around them.
Well, buy the best and build portfolios around. That's the advice from Pratik Agarwal on the futuristic themes. About a minute left for the markets to shut shop, and we're closing in or around the lowest point of the day. So it's not turned out to be a happy hunting ground, must say. For the large caps at the very least, the market breadth too has remained adverse. And while we've looked at what the heat map suggested in terms of winners and losers, and I don't think that's changed pretty much, with ONGC remaining at the top end and Hindalco giving it company, to the low end dominated by IT and banking names predominantly. I mean, just look at that list and it's peppered with that. So I must say, economy facing names like Adani Port, Enterprises and L&T also feature in that list. But just bring the contributors list here and just see what is it that has contributed the most to the fall in the session today. And HDFC Bank right up there, ICICI Bank, L&T and Infosys. Really, I mean, the bluest of blue chips really coming off in the session today. Not the top losers by any stretch of imagination, but just the weight that they possess really hitting the index hard in the session today. The sectoral indices will come up on your screen. I doubt any sectoral index was in the green the last time I checked. And no, there aren't. Media is the top loser, but PSU banks correcting. So essentially financials and IT together have all come off and contributing to that. FMCG, and watch out for HUL because of the delivery volumes as well. And as we shut shop, just let's wrap up with what's happening at the broader end of the spectrum as well. Maybe the top losers and gainers on the mid-cap 100 or the 500 as the case may be, bring them up because those indices too have looked very wobbly. This is the 500 list and that hasn't changed too much, but for the fact that some of the metal names which were doing very well until recently have corrected quite a bit. Spark continues to correct as well. The gaining side, the newsmakers have all done well. Thermax and L&T at different points in the session today. HEG up 3%. So that one has done well. But largely, it's been a wobbly day of trade. The only question is, can this weakness continue or will maybe a better US market move help our markets? I think we'll get to know that tomorrow. Truncated week for us, but therefore tomorrow it becomes an even more important day. Do join us from 7:30 a.m. as we dissect what's happening across the world and then later on India Market Open. But for now, from me and the team that put this show together, thanks so much for watching.